In 2025, while some are chasing the next meme stock, others are quietly building tax-free wealth without ever checking their portfolio twice a day. Let's talk about something smarter than stock picking and way simpler than trading. It's called SCHD inside a Roth IRA. Now, I know that doesn't sound flashy, but it might be the single smartest financial move you can make in 2025. This combo is built on facts, not hype, and the benefits? They're hiding in plain sight. Tax-free income, long-term compounding, low effort. And here's the crazy part. Almost no one talks about it. Why? Because boring doesn't go viral, but boring is what builds wealth. And SCHD in a Roth IRA is quietly making millionaires. Some people spend more time picking coffee flavors than retirement plans. So let's change that. Let's unpack how this simple strategy could reshape your financial future. Chapter 1. What is SCHD and why do investors like it? Let's start with the basics. SCHD is short for Schwab US Dividend Equity ETF. It's a basket of high-quality US companies that pay solid dividends. You're not buying one company. You're buying a whole team of strong, reliable players. It tracks the Dow Jones US Dividend 100 Index. That means only companies with a solid track record of paying and growing dividends get in. No hype stocks, no experiments, just proven businesses. Now here's what makes SCHD stand out. 1. It pays about 3.5 to 4% in dividends. That's consistent cash flow just for holding it. 2. Those dividends usually grow over time, so your income keeps up with inflation. 3. It has a super low expense ratio, only 0.06%. That means you keep more of what you earn. And 4. You get pieces of big names, Coca-Cola, Pepsi, Cisco, and more. It's simple, stable, and pays you to wait. That's why long-term investors love it. Now, SCHD isn't trying to beat the market. It's trying to pay you while you ride the market. And that's a different kind of win. Chapter 2. What is a Roth IRA and why does it matter? So now let's connect the dots. What exactly is a Roth IRA? It's a type of retirement account in the US. You put in money you've already paid taxes on. Then it grows tax-free. That's right. Zero taxes on dividends. Zero taxes on capital gains. And when you retire, you take out every dollar tax-free. Let's break that down. First, no taxes while it grows. Second, no taxes when you withdraw. Third, no forced withdrawals at age 73 like traditional IRAs. And here's the kicker. Your heirs can inherit the account with major tax benefits. Basically, a Roth IRA is a long-term investor's best friend, especially if you're young or in a lower tax bracket today, because once your money's in, Uncle Sam can't touch it. Now imagine pairing that with an ETF like SCHD, an income-generating machine sitting inside a tax-free growth engine. That's not just investing. That's building a future you can control. And this combo works best when you give it time, because compound growth loves time, and taxes hate it. Chapter 3. Why SCHD in Roth IRA? The Wealth Shield. Here's where it gets powerful. SCHD pays you dividends every quarter. In a normal brokerage account, that money is taxed. In a Roth IRA, it's yours, completely tax-free. Now think about that. You're earning money, reinvesting it, and paying zero tax along the way. That's what we call the Wealth Shield. Let's walk through a simple example. Say you invest just $10 a day into SCHD inside a Roth IRA. That's $3,650 per year. Over 10 years, with average 10% returns, that becomes around $64,000. In 20 years, $129,000. In 30 years, nearly $200,000. But remember, that's tax-free. In a taxable account, you'd lose thousands to the IRS. That's money gone forever. Now raise it to $20 or $30 a day, and the numbers explode. $30 per day over 30 years can hit $2 million, all tax-free. That's not hype, that's math. And it's why this strategy works. People wait for the next big stock tip, but they ignore the boring strategy quietly building seven-figure futures. Truth is, most millionaires didn't win big. They just stayed consistent. This isn't a get-rich-quick plan. It's a don't-get-taxed plan. Chapter 4. The Dividend Tax Trap versus Roth IRA Shield. Let's be real about dividends for a moment. In a regular account, they're kind of a tax nightmare. You earn them, sure, but then you pay taxes on them every single year. It's like earning money at work, then being taxed again just for using it. Some call it double taxation. You don't get taxed when a company reinvests profits, but you do when they pay you a dividend. Sounds fair? Not really. Here's the fix. The Roth IRA. Inside it, those same SCHD dividends, tax-free. You keep 100%, you reinvest 100%, and you compound it, yes, 100%. Let's say SCHD pays you $5,000 in dividends in a year. In a regular account, maybe $750 goes to taxes. In a Roth, you keep it all. That's $750 more shares, more growth, more income. Year after year, it adds up, and that's the power of tax-free compounding. Here's the controversial truth. Dividend investing in a taxable account is just giving the IRS a raise. But inside a Roth IRA, now it's working for you, not against you. So ask yourself, why build wealth for the government when you could build it for yourself? Chapter 5. SCHD versus total return ETFs like VOO or SPY. Which is better in a Roth IRA? Let's address the elephant in the room. SCHD isn't always the top performer. VOO and SPY, which track the S&P 500, have often beaten SCHD in total return, especially over the last decade. And that's a key detail. Because in a Roth IRA, you're not paying taxes either way. So total return matters more than dividend income. VOO includes tech giants. SCHD does not. So during big tech booms, SCHD falls behind. But SCHD brings something else: stability. It focuses on quality, profitable companies with strong dividend histories. VOO is growth heavy. SCHD is income focused. So which is better? For early stage investors chasing growth, VOO might win. For those wanting steady, tax-free income in retirement, SCHD shines. In the end, it's not a competition. It's about what fits your goal. Pick the ETF that fits your stage. And remember, a smart portfolio can hold both. Chapter 6. Ideal Use Cases. When SCHD in a Roth IRA really makes sense. Now let's talk real-world strategy. When does SCHD in a Roth IRA make the most sense? First, if you want to build income without active management, SCHD gives you that, and the Roth IRA protects it. Second, if you're someone who prefers simplicity, you don't want to monitor earnings reports or chase charts. You just want your money to grow, quietly, tax-free. Third, if you're planning for a retirement account, those quarterly dividends can cover real-life expenses. And inside a Roth IRA, they're 100% yours. Also, if market swings stress you out, SCHD's holdings are usually less volatile, such as PepsiCo and Cisco, not Bitcoin and biotech. And if you're starting late, even better, because you don't need 40 years to benefit. You just need consistency from today forward. SCHD inside a Roth IRA works best when you're focused on safety, income, and peace of mind. If that's your style, that might be your move. Chapter 7. Why consistency beats timing, even with just $10 a day. Let's kill the biggest myth in investing. You don't need perfect timing. You just need consistency. $10 a day sounds small, right? That's coffee money. But invested daily into SCHD inside a Roth IRA, with reinvested dividends and 10% average returns, it could grow into nearly $200,000 in 30 years. Raise that to $20 a year, now we're talking over $1.3 million, all tax-free. And $30 daily, almost $2 million. That's life-changing. The secret isn't timing the dips. It's showing up every day, letting compounding do the heavy lifting. In fact, every month you delay, that's a month of tax-free growth you'll never get back. Some people try to trade their way to riches. Others try to predict the next crash. But the people who win, they invest boring amounts at boring times into boring funds and quietly build wealth. Don't try to outsmart the system. Use it, because boring done consistently beats brilliant done once. So, is SCHD in a Roth IRA the smartest move in 2025? If your goal is long-term, tax-free income, then yes, this might be one of the smartest moves you can make in 2025. SCHD brings stable dividends. Roth IRA brings a tax shelter. Together, they create a quiet compounding machine. Is it the best option for pure growth? Maybe not, but it's definitely one of the best for peace of mind. This combo isn't for people chasing overnight wins. It's for people who want to retire with dignity and without writing checks to the IRS every year. So ask yourself, are you building wealth for your future or just waiting for the next shortcut? Start small, be consistent, and give your future self something to thank you for. Because in the end, tax-free money always wins.